What is going on YouTube? We are back with another one. Alright guys, so before I get into today's video, I want to share this with you because this is one of our plays from over the Discord that we've been buying over the last couple of weeks and months. Now, strong performance on the day, but check out that 3-month performance, up over 40% since we first started building our position in the play. And I haven't seen anyone on YouTube speak about this one. That's what we aim to do, getting at the right plays at the right time that are often overlooked, and that is where the money is. As I said, we've been building and accumulating. That's why I've got a very respectable position in this one and great dollar value of returns, and there's still further upside. So I'm looking forward to what the play has to bring for me and the team over the Discord. So if you haven't already, make sure you hit that top link in the description, tap into the Discord to get up on the plays and the moves that we make. Alright guys, so I want to cover off a couple of plays in the mega cap tech space because over the last couple of weeks we've seen hundreds and billions wiped off these companies for all different reasons. So it raises the questions of what's the outlook of them, and if it's good, are they buys where they're at right now since we've seen them cool off a bit, or is optimum entry coming to generate higher returns? So let's run the first one. So we're going to kick things off with ticker symbol AAPL. We've got Aapl. Now I always say this play should find its way into everybody's portfolio in some capacity because you're dealing with a company that generates massive amounts of cash. They've got a great brand, good product portfolio, and phenomenal loyalty. But right now, they're just getting caught up in a crossfire from all different directions. One being the concern around a potential slowdown in China, given a large amount of their business comes from there, like 20%. But also they need to iron out some things related to their payment system in the App Store, but also the general rotation we are seeing out of tech at the moment. Now they've been able to navigate all of these issues in the past. No reason why they shouldn't be able to do that moving forward and come out the other side in better shape, continue to scale and generate returns for investors. Now, one thing that shouldn't be overlooked with Aapl is the potential for them to continue doing great share buyback programs, utilizing that phenomenal free cash flow that they continue to generate. Now remember, share buybacks just means that it's going to lower the amount of shares outstanding, meaning your shares are effectively worth more, giving a lift to that stock price. Let me show you guys the charts. So we've seen a 7% pullback off their high. Now this isn't even yet a 10% corrective move, given there's still tons they need to iron out for us as investors. Now over the last few sessions, we've seen a bit of a bounce, up 2.5%. I don't want you guys to be fooled thinking this is a bullish setup. There's nothing bullish about this until they're able to reclaim their 20-day moving average that they broke just a few sessions ago. So until we see Aapl at least $149, there's nothing bullish about the play. Doesn't matter how much they bounce in between. Now what I'm looking at is their support over the last year that they bounced off several times successfully during that time. Now given the way things are, and as I say, there's still tons for them to iron out for us as investors, we could see them retest that support, and that would come in about 6% below the current stock price, taking them down to around $137. So until I see Aapl at $137, that is the level when I would continue to build my longer term position in the play, because I know I'm getting more optimum entry given the current situation. Now, given I see some short-term volatility for the Aapl stock skewed towards the bearish side, the only move that I would make would be to explore some out-of-the-money covered calls on stock that I already own, because therefore I'm getting that upfront premium. So if there is some volatility, some bearish actions in that stock price, that would play into my favor well. Let's run the next play. Now, we recently saw a major move in that Microsoft stock price, and that was a break of trend of their 10-day EMA. And this isn't something that they've done for months and months, and it could signal further downwards movement in the stock, especially because this is a richly valued stock. That means they got to consistently hit all their metrics to please investors, and we know supply chain issues are harpooning plenty of businesses right now, and if this was to be an issue for them in their next earnings report, that could be a catalyst to send this one further downwards. That being said, I'm looking at their 100-day EMA, because the 100-day EMA, that's been support over the last year, and I'm expecting to bounce off that mark if we continue to see downwards movement in the Microsoft stock. That being said, that would come in around 4.5%, 5% below the current stock price, around that $280 mark. So I'm looking at entry for Microsoft around 281, 282, those types of levels to ensure I'm getting optimal entry on the play given the current environment. Next up, we got Facebook, ticker symbol FB. Now, out of all the plays today, this one's seen the biggest pullback since their high of about 8%. It was about 10% a few sessions ago, but we saw a bit of a recovery in that stock price. The reason why this one's come down is because they announced a pre-earnings warning, which is something they never really do, letting investors know the iOS changes is having an impact on their advertising business, and this is something definitely want more disclosure, more clarity on to understand the true impact on the Facebook business. However, Facebook is fast growing. They got dominance over the social tech space, and they're very innovative. Like, they're making inroads into the metaverse, which could be a $280 billion industry by 2025. That being said, let me tell you guys my game plan. So they recently just broke that 30-day EMA that they were abiding to over the last few months, pretty much the whole year. And again, that signaled that downtrend. We saw them bounce off their 100-day EMA, which is to be expected. But I'm expecting further weakness in that stock price and for them to test the 200-day EMA, coming in around that $325 mark. So at those levels, that's the time when the Facebook stock would interest me, because again, there's a lot of things they need to iron out, provide clarity, and we need to understand the impacts on their business. So I'm expecting those levels to be tested at some point this year. Alright guys, so for completeness, I want to touch on the Google stock, because out of all of the tech stocks today, this one is showing by far the most strength. They are still abiding to that 20-day EMA. That's something they've been doing for a very long time now. So we've seen no major break of the technicals, despite the rotation we're seeing in tech, despite all the headwinds facing the markets right now. They're holding up strong and true. Now they are getting ready to gear up for a phenomenal earnings, and I'm expecting outperformance. And this is one that I would grab a position here. Alright guys, that wraps up for this one. If you've got any questions for me, drop them down below and I get back to you. On your way out, make sure you like that comment section for me. If you're new, join the movement, and I'll catch you guys in the next one.